In this video, we review Merrill Edge versus Charles Schwab. Have you used Merrill Edge or Charles Schwab before? What was your experience? Leave your Merrill Edge or Charles Schwab review in the comments section below. Merrill Edge and Charles Schwab are two popular brokerage firms, each with unique strengths tailored to different investor needs. Merrill Edge, a subsidiary of Bank of America, is particularly advantageous for users who prefer integrated financial services, as it allows seamless access to both banking and investment accounts under one platform. For Bank of America customers, this integration is especially appealing due to perks like waiving fees based on account balances, along with benefits from the Preferred Rewards program. In contrast, Charles Schwab is widely regarded for its powerful research tools, educational resources, and advanced trading platforms, making it ideal for active traders and investors who value a range of technical analysis tools. A major advantage of Merrill Edge lies in its user-friendly interface and the ease of accessing detailed research reports and market insights, including ratings from Morningstar and Lipper. Merrill Edge offers automated investing options via Merrill Guided Investing, which suits investors seeking a hands-off approach. However, Merrill Edge lacks more advanced options, such as paper trading and tax loss harvesting, which some experienced investors might find limiting. Despite these gaps, Merrill Edge's integration with Bank of America and its low-cost structure, offering $0 trades for stocks and ETFs, appeal to new or casual investors who prioritize simplicity and cost-effectiveness. Charles Schwab's offerings, on the other hand, cater more to seasoned and active traders. Schwab's platform includes thinkorswim, known for its advanced analysis tools, charting capabilities, and access to a wide range of investment options, including futures, forex, and IPOs. Unlike Merrill Edge, Schwab also offers tax loss harvesting, which can be beneficial for investors seeking tax efficiency in their portfolios. Additionally, Schwab allows investors to trade fractional shares, making it easier to diversify even with smaller amounts of capital. Schwab's extensive research resources, featuring insights from experts, real-time data, and stock screeners, empower self-directed investors to make informed decisions. These features make Schwab ideal for active traders who need sophisticated tools and prefer taking a hands-on approach to managing their portfolios. Cost structures differ between the two firms as well. Merrill Edge's robo-advisory services come with competitive fees, though its advisory rates range up to 0.85% for personalized advice. Charles Schwab's automated portfolios, while also low-cost, come with various tiers, including Schwab Intelligent Portfolios, which charges a one-time planning fee and monthly advisory fees depending on the package. While Schwab's fees may be higher in some cases, the added functionality and tools can justify the cost for those who will actively use them. In summary, Merrill Edge is best suited for Bank of America customers or new investors looking for ease of use, cost-effective trading, and solid research tools. It is less ideal for investors seeking advanced trading features. Charles Schwab stands out for more experienced, active investors, or those in need of robust research and technical tools to support frequent trading. Schwab's platform offers a more comprehensive suite of features, making it ideal for serious traders and investors aiming to build highly diversified portfolios. Choosing between these brokers depends largely on an investor's experience level, trading style, and whether they prioritize integration with banking services or advanced trading tools.